Hello, everybody. Welcome back to Know Before You Owe. Brian Parker with the Brian Parker Group. Today, we're going to talk about credit reports a little bit, uh, what can impact your credit scores, maybe some things to improve them, and kind of what we see when we look at a report once we pull your credit in the pre-approval process. Before anybody out there in the identity police world wants to get their hair all stood up, this is a training credit report. You'll notice the bar is Ross blemished. This is a fake social security number, fake address, and all that mortgage companies can use. There's about 10 or so different names and fake social security numbers we can use in training our staffs and our loan officers. So Mr. Ross blemished here carries three credit scores of 595 with Equifax, 625 with TransUnion, and 610 with Experian. Now, all three of those credit reports or credit scores, excuse me, are workable scores. But as I show you some things in the credit report, Ross, unfortunately, is really not eligible for financing right now due to some late payments. So we'll talk about that. Then we'll talk about account balances and then how you can potentially get your scores up if you need to potentially between a short period or a long period of time to get you where you can qualify for a mortgage. In most cases, if you need to get anywhere from 10 to 25 points improvement in your credit scores, you can probably do that within a 30 to 60 day window, just following the advice of your loan officer. But for Ross here, he's going to have some different challenges as we scroll down and we look at his trade lines. So right now, here's one of the mortgages Ross has shown in his credit report. Savings Bank with a balance on it of $40,338, original credit limit of $56,000, and his payment $535 a month. However, if we look right here, he has late payments. And basically in February of 2024-60, and then 2024-30, that means in January of 24, he was 30 days late on his mortgage, but then he also missed the February payment, making him 60 days late on his mortgage payment. And then we go back into 2023, there's also a 30-day late in June of 2023. So basically, this is three 30-day lates and one 60-day late within a 12-month period. This will make Ross ineligible for future financing, at least until he gets 12 months past being 60 days late on this mortgage payment. The next one is another mortgage he has. We don't know what property. We haven't gone that far in the application. Again, the credit limit, the balance, the payment, and then again, late payments on this one in 2023, both in April and May. Now, these aren't hurting his ability to qualify in terms of guidelines because he's more than 12 months past those late periods. However, one 30-day late payment on any one of your accounts can impact your credit scores as much as 75 to 100 points. So if Ross didn't have these late payments, his credit scores could very well easily be over 700. Again, he's got another mortgage. This is a home equity line of credit. Late payments on that, October of 2023. Again, the balance, payment, and credit limit. So really, these late payments will impede him from getting a mortgage. But let's just say Ross doesn't have those late payments. We're talking about balances and what we can do to kind of help him get his scores up in a short period of time. So let's come down to this institutional loan right here. Late payment again on that one, but because it's an institutional loan or a revolving credit loan, it does not impact the ability quite as much as a mortgage late payment would be. But in this case, his balance is well over 50% of his limit. Probably not a whole lot he can do to get this one down right now. So let's focus on revolving accounts. And this is where it's very easy for you as a consumer to look at your credit card statements, your balances and stuff, and figure out how can I get improvement very quick. So right now on this account, Ross's balance is $4,857 on a $5,000 credit limit. If he can get this balance down to at least below 2,500, so less than 50% utilage, and ideally down to probably less than about 1,800 to 1,700, or where it's around 30% utilization, that will really help improve his credit scores. So if he could do that with this one account and then do it again with another account, then he could potentially get a good 15-point jump over 30 to 60 days just in his credit scores alone by getting these account balances down below 30 to 50% of what the credit limit is. This is one thing that's hurting him right here as well too. This is a charge off. This is an account where he didn't make the payments, so they charged off the outstanding balance he had on that. So charge offs, collections, repossessions, they can definitely impact your ability to qualify depending on the amount and how recent the charge off or collection was. It can impact you. Now, as a note, if you do have medical collections out there, medical collections do not impact your ability to obtain a mortgage loan. They can affect your credit scores somewhat, but they do not get in your way of us being able to qualify you in terms of what you might have to do to take care of those collections. If they're medical, we do not worry about that. As a matter of fact, if you do have collections, do not pay any of them off without consulting your mortgage loan officer first, because when you pay off a collection, what it's going to do, it is going to lower your credit scores, because the credit bureaus look at it as though we admitted guilt that we actually owed the debt. If we need to have it paid as part of getting your loan approved, we'll give you guidance and everything in that. Everything else in Ross's credit report is zero balance. Things will go back quite a bit of history. But then when we get down to other information, we're going to see public records. So if you've got bankruptcies out there, judgments and stuff, we're going to see that going back to a 7 to 10 year period. And then inquiries. And I see this, every loan officer sees this so much. You may have started with one lender and they told you they couldn't get your financing done. You may have started with another lender and you didn't like the rate. And you went around and you shopped lender to lender to lender to lender. And then we're going to see 5, 6, 10 credit inquiries in here over a 30 to a 90-day period. Depending on that type of inquiry, that may be impacting your credit scores and so forth as well. Just another thing to note in terms of a credit report, because you will receive a consumer copy of your report once you have your mortgage credit pulled for applying for your loan. You're going to get a consumer report, and it's going to go back through and it's going to show you all your creditors and everything in the report. It's going to give you a rundown of your credit scores. You'll even see a spot in there where you have derogatory accounts, and we have to explain these things as part of your mortgage loan approval. We have you complete this letter with a signature and send it back to us. When you're reviewing your credit report, you'll see aliases, name variations, and so forth. I'll just jokingly tell you, I'm Brian Parker, but one of the aliases in my credit report is where somebody who pulled my credit years ago associated the name as Brianna. So I have a twin sister named Brianna Parker apparently out there somewhere. So this is just kind of a quick overview of a credit report. If you have a credit report that you would like to have reviewed, you can pull it from Credit Karma or annualcreditreport.com or whatnot. Again, those scores are not going to mirror what we see here in terms of a mortgage credit score. What you see, we're going to see about 20 points or so lower than that. But if you need guidance and help on trying to help, what can you do in the meantime to get your credit scores up? Pull your credit report and send it over to me, and I'll be glad to take a look at it. I'm Brian Parker with the Brian Parker Group. God bless you. Hope you